closing out a wild week for equity markets and treasuries alike. You look at the screen behind me and it really doesn't reflect all that really happened this week. The S&P closing flat on the day, the Nasdaq slightly higher here, but you're looking at what was a record run here for the S&P and Nasdaq all week long. In fact, the outperformance of tech relative to the broader market, the biggest outperformance that we've had going back to 2002. And that could be a problem. You see that reflected on the third line of the screen there. Dow Transport's down 1% here on the day. The Russell 2000 down almost 2%. It looks like some of the industrial companies, Scarlett, are maybe getting left behind.
Yeah, I've got two more that really illustrate that divergence you were just talking about here. The first one is MSC Industrial. The ticker is MSM, falling the most since March 2020, losing a tenth of its market value today. This is a distributor of metalworking products, and it closed at a 15-month low. It pre-announced disappointing third quarter results and cut its full year margin forecast. Now, the concern here is that the CEO blamed softness in heavy manufacturing, not a great sign for the overall economy. On the flip side, tech was doing better, and Adobe is a great example of why. 14.5% gain on the day, best performer in the S&P 500 today after projecting strong future sales for its creative products, a real sign here that customers are adopting its AI-specific tools. Now, let's move along to our top story this hour, and that is the relationship status of democracy and markets. What is it? Well, it's complicated. Elections don't usually matter all that much to the day-to-day moves in asset prices until they do. And we've seen that play out in emerging markets this month, particularly in Mexico and India. To a large extent, the outsized reactions may be due to outsized gains in the lead up to the actual elections, but they do leave investors wondering, what now?